You're listening to AI Prism from Seoul Economic Daily.
Foreign investors have net sold 136.7 trillion won. That is 91 billion US dollars year to date, driving the Q2 USD to KRW average up to 1,500.1 won. That is the absolute weakest we have seen since 1998, and it is forcing portfolio managers to urgently reevaluate their Korea weightings. It's Monday, June 29th. Here's why global investors are paying attention to Korea today.
Right. So for this deep dive, we are analyzing reporting from the Seoul Economic Daily. And our primary mission here is to figure out if the notorious Korea discount is widening and, what these massive capital outflows actually mean for your portfolio's risk exposure.
Well, to really understand this, you have to look at the massive disconnect between Korean corporate performance and market reality. I mean, think of the current KSPI rally as a house with this gorgeous new roof, but a cracking foundation.
Oh, I like that analogy.
Right. The semiconductor earnings look incredible from the street, but structural risks are just quietly eroding the base down below.
Yeah, and that roof is undeniably powerful right now, largely thanks to SK Hynix. I mean, they currently hold a dominant 56.4% global market share in high-bandwidth memory.
That is the HBM needed for AI, right?
Exactly. The specialized, super-fast memory required to power those massive AI data centers.
Yeah.
Just to put that 56.4% into perspective, they are massively outpacing Micron, who sits at just 23.1%.
Okay, wait. If their market share is so dominant, why the massive foreign sell-off? Are investors seeing like a ceiling on this tech?
It's actually not a ceiling on their technology at all. It's more like the floor is dropping out from underneath them due to cascading geopolitical and pricing threats. Your foundation crack analogy is very literal here.
Geopolitics always messes with the fundamentals.
Definitely. I mean, over the weekend, Iran struck 2 commercial vessels within 48 hours, which triggered U.S. retaliatory airstrikes.
Wow. And since Korea's export economy is incredibly energy dependent, any threat to the Strait of Hormuz directly threatens the energy supply routes that keep those massive foundries running.
Right, the exact routes they rely on.
Yeah, you literally cannot manufacture these chips if the power costs spike.
Exactly. It completely alters their energy cost assumptions. But, the threats aren't just military. There's a severe corporate threat brewing right now, too. Apple is actively lobbying Washington to approve memory purchases from the Chinese DRAM maker CXMT.
Oh, I get it. Because spot prices for these memory chips have nearly doubled recently.
Yeah.
Apple wants cheaper components.
Right. And if they successfully introduce a Chinese competitor into their supply chain, it breaks the oligopoly that Korean chipmakers currently have on memory pricing.
So it's not just a lost sale for them. It fundamentally threatens the pricing power that is sustaining Korean earnings right now.
Precisely. And the Korean government sees these dual threats, the energy and the revenue, and they are reacting. Policy-wise, Korea is signaling a 40 trillion won supplementary budget.
That is a massive amount of capital.
It is, yeah. And this is heavily targeted at 2 things: funding AI infrastructure procurement to keep their tech edge, and providing inequality relief to offset K-shaped polarization.
Let's clarify that for a second. K-shaped polarization basically means high-income tech workers are booming and moving up the K, while the broader consumer base faces stagnant wages and slides down.
Exactly.
So by targeting inequality relief, the government is essentially trying to inject cash directly into social programs to prop up that stagnant consumer base before it drags the wider economy down. But, money can't fix everything, right?
What do you mean?
Well, I'm looking at Samsung's employee turnover, and it's sitting at 10.1%.
Oh, wow. Yeah, which really highlights a rising long-term talent execution risk against global peers.
Right. You can build all the infrastructure you want, but if you are bleeding the very engineers required to innovate, your long-term growth is in jeopardy.
Absolutely.
So looking at this data, how should you adjust your Korea weight right now?
The compound risk of Hormuz re-escalation, Apple's CXMT lobbying, and sustained won weakness argues for tighter position sizing and sharper scrutiny of earnings quality before you make any allocation increase. However, SK Hynix's July 10th NASDAQ ADR listing serves as the ultimate near-term test. If it trades at a material premium to the KSPI, it creates a concrete arbitrage signal that could reset the valuation case for the entire Korean tech sector. Until the Bank of Korea signals an end to foreign rebalancing, your currency unhedged Korea positions will continue to face a measurable return drag that no near-term rate catalyst is likely to reverse.
It really leaves you wondering, will SK Hynix's U.S. listing finally break the notorious Korea discount, or just prove that even dominant market share can't outrun geopolitical gravity? This deep dive was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a Juan IFRA award-winning series. We'll be back tomorrow.
KRW plus USD, #GoSPI.
You've been listening to AI Prism from Seoul Economic Daily.